Hi, everyone. Welcome to the Learner Group Moving Markets Monthly Recap. I'm David Sokolovsky, Wealth Advisor with the Learner Group, and I'm joined with J.R. Gondeck, Managing Director and Partner of the Learner Group. So as we look back at 2020, it was a year of extreme difficulty. We experienced a global pandemic and really saw record declines in the economy as well as the overall stock market in the US and abroad. We even saw oil turn negative for the first time in history. But there were some positives, and we saw really the breakthrough in scientific achievement and the ability to develop a vaccine in record time, as well as some of the other positive news with the record fiscal and monetary intervention from the government, which helped support a record recovery in global markets and the economies worldwide. So, JR, as we look back at 2020, what are some of the techniques and tools that we used to manage through the crisis?
Yeah, crisis investing, we talk about our crisis playbook, and we needed it in March and April of this year. So when you look back to the financial crisis or the dot-com bubble, you tend to do three things. Number one, you raise cash just because you don't know what's likely ahead. You want to protect in case things get much worse in the markets. Second, you want that cash to take advantage of opportunity, because each crisis has opportunity. It's just a matter of waiting patiently and identifying. And then third, you wait for the signal to buy. And in all three crises, we look for the Federal Reserve, and this was no different. There tends to be false indicators along the way, like cutting interest rates. But this time around, like the financial crisis, when the Fed goes all in with money printing and quantitative easing, that was the signal. And that was March 23rd during the crisis. And at the time, it was a signal to us to start to buy. And then in some sense, it's what do you buy? The answer in general is anything, because everything is cheap at the time. But in each crisis of the last three that I've been through, from dot-com to the financial crisis to now, you look for small caps. And small caps where they have a lot of cash, and in each time they had more cash or close to it than the company was trading for. So for example, they had $8 or $9 a share per cash in their balance sheet, and the stock was trading less than that. And those tend to recover in the buffer overall. And that worked out very well, and it allowed us to keep a lot of cash through the summer and not miss out on the return. So David, as we're looking ahead to next year, what's one of the main themes you see ahead?
Yeah, it's really two themes that we're looking at, and they go hand in hand. One is inflation in the US, and that's really driven by the continuing weakening of the US dollar. We saw that trend start in the later part of last year in 2020, and we see that continuing throughout this year. And a couple areas that are going to benefit from this trend are international companies, commodity producers, and companies that basically have exposure to the reflation trade that we've been talking about.
And when you look to add on what David's saying is we look for margin expansion. So when you look at inflation, that could be bad for certain industries, but in others it could be very, very good. And when you think about a copper mine, for example, as copper prices increase, you don't need to necessarily hire more people to mine the same copper. But as prices go up, you get paid more and your profit margin expands. So as we look to 2021 and the likely increasing inflation concerns that are out there, you're going to see a lot of these companies benefit very well, and we think that's going to be an area to position, as well as it's just a 10-year cycle that we've talked about that kind of favors and sets up nicely. And the other thing you're likely to see in 2021 is a record amount of dividends. Many companies cut their dividends during the pandemic. Financials, for example, have been restricted by the Federal Reserve. But after we pass the March quarter, more likely than not, you're going to see record amounts of dividends from the banking sector. So it's an area to watch. And again, similarly, as stock prices are high, banks benefit that have a lot of wealth management business or exposure to the stock market from that margin expansion idea or theme that we're looking for in 2021. So these are two areas, inflation and then the companies that benefit for that margin expansion. And this should continue to support that rotation that we've seen in the fourth quarter of the markets. There's nothing wrong with the big technology companies, but in general, they're fairly or overvalued. There's better opportunities in this area of the market, we believe.
Great. Well, Jared, thanks for the recap, and thanks everyone for watching and listening. We look forward to catching up next month.
Thank you very much.